My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one to make friends, but trying to make you some money. My job is not just to entertain, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. There's a reason I end every show with the same message. There's always a bull market somewhere. It's because of days like today, when the market spent the whole morning drenched in red before rebounding, Dow ultimately advancing 37 points after being down more than 400 points, S&P declining 0.39%, NASDAQ losing 0.10%. At the moment of maximum panic today, you were getting incredible buying opportunities, so you had to hold your nose and search for the bull market. Oh, I know it's hard. How the heck can you feel positive about stocks when there's a new, more contagious strain of COVID in the UK and our government's doing nothing to stop it? Unlike other countries, we're not even trying. There's no American travel ban on Britain. That's crazy. But on a morning like this one, you had to recognize that the travel stocks would indeed get crushed, putting pressure on the entire market. They are market darlings and generally spreading the air of panic. That doesn't mean, though, that you have to panic. Nobody ever made a dime panicking. Instead, you need to keep your eyes open for potential opportunities, stocks that are being put on sale even though they don't deserve it. While most of these sales were temporary as the averages came roaring back, we know this kind of thing happens again and again and again, so you got to be prepared for it. And so in order to get you prepared, let me give you Cramer's Bull Market Somewhere handbook that made me feel optimistic this morning rather than scared because I was ready. It's the same handbook I've been using since I started my radio show way back in 2001. Step one, you got to look around for any stock-specific news you can seize on from the day before to make sure you aren't buying a turkey for Christmas. On Friday night, Nike reported a spectacular quarter with amazing digital sales, including some awesome numbers in China, 7 billion brand impressions on social media, and a new app, SNKRS Sneakers, that sells the latest and greatest special edition classic shoes. When the market's getting hammered, you either buy something like Nike or you watch it to see if the averages can turn around. Worst case, you buy the stock, and then it goes lower, which just means you can buy more into weakness. You can be fearless with Nike because you know they're doing great because they just told you that on Friday night. Speaking of Friday news, after the market closed, the Federal Reserve gave you, well, a shock. And the banks, a nice surprise. Yes, there was a Christmas present. After a prolonged hiatus, they can repurchase their own stocks again. This one came out of nowhere. The banks have accumulated a huge capital surplus this year, but they haven't been able to reward shareholders for their patience. Now they can, and it is a game changer. As soon as the good news broke, okay, what happened? Well, J.P. Morgan announced a $30 billion repurchase authorization, as if they knew it the second was going to come out. Morgan Stanley chimed in, too, with $10 billion. Goldman Sachs jumped on the buyback train, too. I can't overstate how terrific this is for the shareholders. At a time when Congress is about to pass a $900 billion stimulus package, you could easily see the Fed continue its moratorium on bank buybacks. After all, well, we could be in for, some people would say, a lockdown, and other people would say recession. However, the Fed knows the banks are brimming with cash. They've already passed the government's stringent stress test, so why not let them return some of their capital to their suffering shareholders? Again, on a bad day, you need to look for surprising pieces of good news. That's exactly what these bank buybacks are. So when J.P. Morgan and Goldman Sachs temporarily pulled back after its this morning, that was a buying opportunity. While the bank stocks finished strong, the whole group remains incredibly cheap. And now they finally have a reason to go up. I almost hope the market sells off again, give you another chance to buy them in a weakness, especially Morgan Stanley, by the way, which is zoomed on its buyback announcement, but more importantly, has probably the safest model of any of these I've mentioned. Oh, and let's not forget about the stimulus package itself. People were very concerned that Congress might not be able to pass anything. So when they finally wrangled together a $900 billion relief package, well, you can't just ignore it like it didn't occur. That's an unmitigated positive for both the economy and maybe for our purposes, the stock market, regardless of the new COVID strain. So what works when the government gives us an extra $300 per week of unemployment benefits, along with the one-off $600 checks for every individual making less than $75,000 a year? Well, where do people shop when they get a much-needed windfall? Well, in this country, among the many people who are not of means, let's say that, well, they go to Dollar General. It's been a winner every step of the way. Again, any weakness is a buying opportunity. We know the big box hardware stores get a big chunk of the government's round of relief checks. That happened last time. This time should be no different. So you go for Lowe's and Home Depot. If the market rolls over tomorrow and they come down, you have to expect the analysts will start pounding the table about how these two hit it out of the park with the last stimulus. So why shouldn't it happen again? Step 2 in the bull market somewhere handbook. Look around for high-impact research. What's the most important, most aggressive, most compelling upgrade you can find? Don't know which to go to? Well, that's why I do my mad dash and squawk on the street, trying to capture the most positive piece of research, or negative, of course, but positive, that could buck the downturn. That's what I like to do on these big down days. And it was Microsoft today, a fabulous report from Citi, arguing that Microsoft's Azure cloud platform could come on stronger than Amazon Web Services or Google Cloud. Those are the only real competitors. And that's a bold statement, backed up by a number bump for Microsoft's Office 365 business. Even if you didn't feel like buying Microsoft when it pulled back this morning, you had to at least watch the stock. Because when it turned around, the whole market rebounded from the lows. Microsoft, which opened down, finished up $4. That's what we're looking for. That's golden. Next, I like to look at the unseasoned stocks of newly publicly traded companies. In this case, I'm focused on the ones that also fit the stay-at-home economy thesis. We know those are doing well right now. Now, aside from just stay-at-home, but I happen to like Snowflake. You know that. I like Airbnb. Snowflake's the high-flying data warehousing play where the estimates are probably way too low. Airbnb gives you the safest way to take a vacation during the pandemic because renting out an entire house and cleaning it yourself is much less risky than riding a hotel elevator with strangers. We will hear later on from Thor, which does motor coaches and RVs. They, too, are safe. Finally, you fall back on the bull markets that benefit from whatever's crushing the market. Today, this is stay-at-home stocks. The new strain just makes them more money. If you think we're headed for another lockdown, what do you want to own? Well, first and foremost, you want to own Roku, so don't overthink it. That's become the go-to name for almost everybody in this market, looking for the right stock for a lockdown. DocuSign, that one's permanent and growing like a weed. Let's watch the stock of Peloton. Tonight, Peloton bought exercise maker Precor, which could give it more staying power post-pandemic, and caused, yes, a short squeeze. Listen, I know this is not an easy series of checkdowns. I mean, you're not an NFL quarterback. But when the market rolls over on a day like today, you have to recognize that not only have you seen this movie before, but it's actually more like a long-running Netflix series. You're going to get the hang of it. Now, there's one thing you should never do when people are panicking. Never try to buy something that's down for a really good reason. You don't go after the oil stocks when oil's down. Last week, FedEx reported a widely panned number, so you can't even think about it, even as I was drawn to it. No. Here's the bottom line. When I say there's always a bull market somewhere, that doesn't mean it's always obvious. Sometimes it's less visible, and you have to dig for it. But when the action's looking ugly, you need to dig harder, because that's when you strike gold. Luis in California. Luis.
Good evening, Mr. Cramer. How are you, sir?
I am fine. How are you?
I'm good. Thank you. My question is regarding a stock that has recently fallen nearly 50%. From its all-time high, but it's currently rising again. I wondered if it's still a buy at this price, and what your thoughts were on Luminar Technologies. It's ticker LAGR.
Yeah, I mean, you know, we just wrote this up, and Ben Stoto and I were going back and forth on trying to figure out the auto parts manufacturing. And you know what? I'm going to come back and say, why not buy Tesla? Hey, by the way, the people who were saying that I didn't like Tesla in my tweet file, you're going to have a really miserable night and probably a miserable week, because I'm not vengeful. I'm not a sweetheart. Let's go to Matt in New Jersey. Matt.
Booyah. What is up, Jim? How are you?
I am good. How about you?
I'm doing well. I loved your interview on the Dave Portnoy show last week. And speaking of Portnoy, I love what him, Big Cat, and Ardini are doing with Barstool and Penn.
Yes. And
people can talk all they want about the airlines and cruises for the reopening plays, but what about DraftKings and Penn? Half the U.S. hasn't even legalized mobile sports betting, and I think there's an insane growth potential here. And
you're right. I mean, now, just so people know, I do a program for DraftKings, Bull Market Fantasy. But I think these are great opening trades, and they're both fantastic stocks. Again, you can say, well, Jim, you do a program for them, so shut up. Okay, but I have to tell you, it's a fantastic stock. I'm just going to say it. Penn National was incredible, and remember, they've got great physical plant stuff, and Nardini does a great job. That's obviously the person who works with Portnoy. These are stocks I like. And candidly, I've liked them for so long. I don't want people to say, oh, my God, Cramer just got on the Penn National bandwagon, because that would indicate that you're truly a moron. All right, there's always a bull market somewhere is my motto, right? Because it's true. It's not always obvious. Well, if you look hard enough when things get ugly, you can strike gold. Well, Mad tonight, my excuse with the CEO of Robinhood. The company has helped disrupt Wall Street, bringing plenty of new investors in the market. But could its own model be disrupted by increased scrutiny? I'm going to get the latest. Then, as worries over the coronavirus rattled the average today, is it time to circle back to some of the COVID winners? I'm lying 4, as I mentioned a second ago, to see if the open road play could still pay. And I'm sitting down with the CEO of AGCO to see which way the wind blows in the agricultural sector. And believe me, it always blows for the bulls. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.